Welcome back to the channel, everybody. In today's video, I want to go over not only my personal plan to set myself up for a win in 2026 when it comes to my finances, but I also want to talk about where I think the market is going and what I think you guys can do if you're maybe a little bit stressed about the market in 2026 and how you guys can set your portfolios up for the win. Now, I'm not a financial advisor by any means. I will say I am up about 55% across all my accounts this year with investing. So I think for me, for 2025, it was a pretty successful year. Now, the main thing I'm making this video for is now is the time where you guys are going to see a lot of videos of people pretty much telling you the sky's falling, right? There's a lot of negative sentiment towards the market right now. A lot of consumers are preparing for a crash. A lot of consumers are getting weary about the economic landscape that we're in. So you'll see plenty of videos of people telling you that we're going to go through a financial crisis and your account's going to lose 30% in 2026. But here's the thing. At the end of the day, one, no one knows what's going to happen, right? We can say 2026 is going to be a down year for the market, but truthfully, no one knows what's going to happen. Second, we can worry, we can panic. The main thing is we have plans in place to set ourselves up for the win. So with this video, I want to let you guys know my plan, what I think you can add to your plan if you're maybe a little bit nervous for 2026, and once again, what I think is going to happen for the stock market this year. But if you guys are nervous or worried about 2026, just remember, no one knows what's going to happen. And while yes, there might be down years, it's just a normal part of the market. So let's get into the video here and let's start breaking these things down. So before we get into what I think you guys can do and kind of give you guys some guidelines and some railings of how I would go about setting up my portfolio for 2026, I want to talk about one, what I think the market's going to do, and two, how I'm structuring my personal accounts. So let's run through this quick here. First, I do think in 2026, we're going to see a downturn in the market. I do think things are going to drop. I do think things are going to have some shakiness to them, but I'm not panicking, right? I'm not stressed out. I'm not going to tell you guys we're entering a financial crisis. I'm not going to tell you guys that you need to be stressed out, and I'm not going to fearmonger you guys. I do think things are going to drop, but once again, if you're a younger person, you're a younger guy, you got a lot of years left in you for investing, so there's nothing to stress about with that. Now, as far as my personal accounts, let's run through them really quick. The first thing that I plan to attack is my Roth IRA. I plan to max this out as soon as I can. Usually I try to aim for about April, right? I think this year I maxed it out in August or September, but I want to max out my Roth IRA and keep my holdings very simple, right? Right now my Roth IRA is pretty much made up of VU and QQQM, and I plan to keep it that way, right? So dollar cost average into those things. Maybe at the beginning of the year, do some lump sum investing, get some money in there, and try to max it out as soon as possible. Now, the next thing is my 401k. Right now with my 401k, I actually contribute 20% of my paycheck to my 401k. Now, if you guys don't watch my net worth videos, I highly recommend you do. But I do plan to trim this down. The reason I'm investing so much right now is because I live with my parents. But at the beginning of the year, I actually am moving out of my parents' house. So this 20% into my 401k, I will probably have to tone down a little bit because I'll have to start paying rent and utilities and X, Y, and Z. So for my 401k, I'm probably going to trim it down to about 10%. My company right now matches 6%. So I feel like 10% is a pretty decent number. Now, once I max out my Roth IRA and I find a nice solid number of contribution limits for my 401k, next will be my taxable brokerage. Now, I'll continue to dollar cost average into my taxable brokerage account. And with this account, very, very simple. It's just like my Roth IRA. I'm a very simple investor, right? Pretty much my holdings in my taxable brokerage are VU and VGT. And I do plan to still continue to invest into VU and VGT in 2026. So those will be the main things that I dollar cost average into. Now, the next thing is my crypto accounts. Crypto, I do think 2026 will be a little bit of a shaky year for crypto too, but that does not change the fact that I will continue every single day to dollar cost average into Bitcoin. I believe in Bitcoin. I like Bitcoin for the future. I'm 25. I think by the time I'm 50, Bitcoin will be a lot higher than it is right now. So I will, I'll still continue to invest $20 a day into Bitcoin. And lastly here is my cash. Now I plan to trim down my cash positions a little bit, right? But the nice thing is with cash, having a decent amount of cash on hand, I can buy some stocks I like at a discount if they do plan to drop. So that's kind of what I plan to do with my Roth, my 401k, Bitcoin, and my cash positions. But let's get into what I think you guys can do to kind of structure your portfolios for 2026. So let's get into the part of the video now where I'm going to tell you guys kind of some guidelines and some rails that I like to implement into my portfolio. These are things that I still currently live by when it comes to my investing plan. And I think if you guys are having a hard time setting up your plan for 2026 or looking for some kind of easy, stress-free ways to set these things up, these are great kind of guidelines you can follow. And the first guideline here is me personally, I'm trying to lower the need to be right. And I think this is a great starting point for a lot of people is, bro, just lower your need to be right. And what I mean by this is you don't need to stress yourself out about timing the market perfectly. You don't need to know which stock is going to outperform next year. And you definitely don't need to know which stock or which market is going to do good in 2026. For a long time, right, I thought good stock investing meant having high conviction and strong opinions about where things were heading and making projections based off of that. But usually for a lot of people, that actually turns into a lot of anxiety and a lot of stress when it comes to your finances. Look, you buy a stock and the second it dips, you start questioning yourself. Or you see a headline and suddenly you get FOMO about buying that stock and then it dips or it goes up. Or you start, thinking in weeks instead of years, right? And I know a lot of you guys have been there. But here's the thing. If you're in your teens, you're in your 20s, you're in your 30s, we need to stop looking at investing in terms of weeks, right? Or in terms of months, or even in terms of a year. We need to start thinking of investing in terms of decades, right? I still have decades before I plan to take any profit on any of my investments. If you think in terms of weeks or months, at that point, you're almost not even investing anymore. You're reacting to the market, right? You're almost week trading, not day trading, you're week trading or you're month trading, right? We need to think in terms of decades. We have such a long time ahead of us that even if the market does drop 20% in 2026, why would that affect you, right? Now, obviously, if you're close to retirement or you plan to take profit, that's a different story. But if you're a long-term investor, right? Someone like me in your early ages, that shouldn't affect you. If anything, that's a great buying opportunity. So instead of trying to be right, especially about individual stock moves, I like building a stock strategy that works even when I'm wrong in the short term. That's why I lean so heavily on things like the S&P 500 or even like a total world fund, because I don't need to pick the winning stock. That's not my goal. I just need to own the market and let time do its thing. And you can apply the same strategy to individual stocks, right? I'm not trying to nail the perfect entry. When it comes to individual stocks, I buy companies that I'm comfortable holding through drawdowns, through volatility, and through down markets. For example, I buy a lot of Google. I really like Google. I have high conviction in Google. I think Google is a great company. So I'm okay holding Google. I'll be honest with you guys, if Google dropped 50%, I would still buy Google. So I'm okay owning an individual stock like that. Because look, stocks don't move in straight lines. You guys know this. They go up, they pull back, and they definitely frustrate us, right? So that's all normal. So lowering your need to be right is basically telling yourself that I'm okay buying when things feel uncertain. And that sets you apart from a lot of other investors, because a lot of investors, even seasoned ones, will pull profits or pull out of their investments when things are uncertain, or just stop buying in general. And they lose out on so many potential returns by doing that. So I'm okay seeing red after I invest because I have strong faith in the things I believe in, and I think of investing in terms of decades. So I rather buy consistently good businesses or ETFs and let time do the work than try to be a stock picker, right? So if you're watching this, the goal with stocks or ETFs isn't to be right today. It's to be right and to be happy with your investments years in the future, 10 years, 20 years in the future. Now, the next thing, this kind of plays into what I just talked about, but simplify your portfolio, right? If you look at your portfolio right now and you get stressed, more than likely it's not simple enough. I have very simple portfolios, right? And I think a lot of people, especially early on, assume that more positions mean more opportunity. Now, more stocks, more ETFs, more strategies, but Over time, I've realized that complexity usually just creates a lot of confusion in your investment accounts. You might forget why you bought certain things, or you start overlapping investments without even realizing it. And when the market gets shaky, it's a lot harder to stay confident in what you own. So instead of adding more investments, 2026 should be the year that you actually focus on trimming things down. I plan to do this in my own accounts. Fewer positions, clearer reasons for things you're holding, right? You want to have strong reasons for why you're holding certain stocks. And nothing in my portfolio that I'd panic about if it dropped 20 to 30%. Everything in my portfolio, I want to be so confident in that if it drops 20 to 30%, I want to be happy that I'm actually going to be able to buy more. And that doesn't mean going all in on VU or all in on a total world fund, right? It just means everything in your portfolio has a role. So when the economy starts to feel uncertain, right, and people are telling you to do X, Y, and Z, simplicity is going to become your advantage. It's easier to stay consistent when you actually understand what you own and why you own it. So once again, if your portfolio is stressing you out, that's usually a sign things are a little too complicated and that maybe you need to trim down some of those positions. Now, next up, and look, I know cash is a little hard to come by nowadays. Things are expensive and jobs aren't paying the most, but we need to treat cash like a tool, right? Not a missed opportunity. And for a long time, I felt like holding cash meant I was doing something wrong. Like I was missing out or I was falling behind because that money wasn't invested. But heading into 2026, I see cash a little bit differently, right? Cash is that dry powder tool, right? It gives me flexibility and it gives me options. And honestly, it gives me a lot of peace of mind. That's why I like to dollar cost average versus lump sum investing, because I like to have decent amounts of cash on hand. And especially in an environment where things might not feel as stable as they used to. Right? So some of my cash is going to work, right? I'm slowly putting it back into the market, I'm staying consistent and staying disciplined, but I'm not draining it completely. And I do that very intentionally, right? I want to know that if we see a significant pullback or something maybe life-changing pops up, like Meta drops, 70% again, I'm not forced to sell an investment at a bad time or make a rush decision. At that point, I have cash on hand. And that lets me be patient, right? I can make strategic investments when I want to for certain stocks that I believe in when we see some downturn. And even if nothing dramatic happens, having that cash buffer helps me stay calm when the market gets volatile because I know I'm protected, right? And I'm not holding cash because I'm bearish or I'm believe in a financial downturn. I'm holding cash because I'm just being realistic. So if you're watching this, cash isn't dead money, right? It's protection. For a lot of people, it's flexibility, and it gives you a lot of options. And in a market like this, where there's a lot of uncertainty coming up, that truly matters. Now, the next guideline too, and this was a huge one that helped me start investing, but if I had to point to one thing that's helped me so much with investing, it wouldn't be stock picking, it wouldn't be research, it's literally just automation. I've learned that the biggest enemy to good investing isn't a bad market. It's emotional, inconsistent investing. And the easiest way to remove emotion and to be consistent is to take myself out of the decision as much as I can. So heading into 2026 and 2025, I did this all 2025, but I'm doubling down on automatic investing. I'm, putting the flag in the ground saying that automatic investing is the best thing you can do for yourself. Money gets invested on your schedule, whether the market feels good or terrible, and I don't have to wake up and decide if it's a good day to invest or let that emotion creep in. I don't have to react to anything because the plan just runs itself. So automatic investing forces me to be consistent and make sure, that I'm buying during times that are boring or during times that are uncomfortable or during the months where everyone's rejoicing that we're all rich. It doesn't matter. I'm automatic investing. And the best part is once it's set up, it literally takes no effort. I can focus on earning more money, I can focus on living my life, and I can focus staying disciplined in other aspects without having to constantly check my portfolio because I know the plan's running in the background. So if you're watching this and you're not automatic investing, I would highly recommend get yourself to automatic invest, set yourself up on a schedule that you can kind of tend to, and it'll literally help so many things, right? Because it gets rid of trying to time the market and emotion. Automation just makes it so consistent and so easy to have discipline on investing. Now, the next thing is I'm preparing mentally for a lot of volatility. And this is probably one of the most important things that you can bake into your portfolio. And this has nothing to do with actual money itself. This is, once again, all comes down to you. I'm preparing myself mentally for what's going to happen because no matter how good your plan is, the market will test you. right? 2025 was a pretty decent year, and we got tested around April pretty hard. Things took a pretty big dip around April. There's gonna be red days. There's gonna be red months, and maybe even a year. Maybe all of 2026, nothing seems to really stick or work. But instead of being surprised by that in the moment, I'm accepting it now. I try to remind myself that volatility is not a sign something's broken. It's the price you pay for being in the market, right? You got to play the market. It's a game, right? And it's going to test you. If stocks didn't move around, there wouldn't be any opportunity. So you have to accept that the market's going to go down and it's going to go up. So I'm asking myself uncomfortable questions ahead of time. Like, what am I going to do if my portfolio is down 20%? Honestly, right? If I wake up tomorrow and my portfolio is down 20%, what am I going to do? Am I going to panic? Am I going to buy more? Am I going to keep my plan the same? What am I going to do? What if it's down and it stays down for 3 months? What am I going to do? What if the headlines say that VU's the worst investment in the world? What am I going to do? What if the headlines say everyone's panicking and we're entering a financial crisis? What am I going to do? You have to ask yourself those, tricky answers and answer them honestly, because you need to prepare yourself mentally. And if the honest answer, right, if you ask yourself these questions and your answer is, I'd freak out or I'd start panic selling, well, then your plan needs to change. Not later, but now, before any of that actually happens. So preparing mentally means setting up expectations. And the last thing that I'm doing, the last guideline I can give you guys, is focus on what you can control. So after you spend enough time around the market, you'll realize how little of it you actually have control over, right? I can't control interest rates. I can't control who's in office. I can't control layoffs. I can't control headlines. I can't control how the market feels any given day. And for a long time, I wasted a lot of energy reacting to things that I have zero influence over. So heading into 2026, right, you got to put your focus back where it belongs, on the things that I can control. I can control how much money I invest. I can control how consistently I invest. I can control in what I invest and why I invest in it. I can control how much money I save. And I can, control how I respond when things get, uncomfortable. And that's it. It's really that simple. When you focus on those things, right, the noise and everything going on around you starts to matter a lot less. You stop feeling like, everything's coming after your portfolio, and the plan becomes simple, right? Execute on your plan, show up consistently, stick to the rules, and let the compound interest do its thing. So those are the things that I think you guys can do to kind of help yourselves set up guidelines, railings for your portfolio in 2026. But it's also important to talk about what I'm not going to do in 2026, right? Because a lot of investors make mistakes that don't come from bad intentions, right? They just come from overreacting. So in 2026, there's a few things that I'm going to intentionally stay away from, and I'd highly recommend you guys to stay away from these things as well. First thing is, I'm not going to chase any hype, right? If something is blowing up all over social media, a stock, a cryptocurrency, and everyone, suddenly feels late to it, I'm probably not going to touch it. That urgency is usually a sign that it's already priced in. The risk is already high with that stock or crypto. Next is, I'm not ever going to try to time the crashes or the bottoms. Look, if things are down 20%, I'm going to keep buying. If things are down 25%, I'm going to keep buying, because I don't know when the true bottom is. I don't know when the true crash is, right? I don't need to be the person who buys at the exact low. I'd rather be a little early or a little late and spread out over time than miss the move completely because I was waiting for the perfect moment. So don't try to time crashes or bottoms. The third thing I'm not doing is check my portfolio every day. Look, if you have a strong plan in place, constantly watching your investments, it messes with your head, because you're going to see red days. You're going to think, man, what am I going to do with this? My plan's not working, man. I'm down 5%. But most of the time, it doesn't lead to better decisions, right? It just leads to stress, it leads to anxiety, and it leads to you straying away from your plan. If you have a good plan, it shouldn't matter whether the market's up, down, sideways, you stick to your plan. If you have a good plan in place, you don't need to check your portfolio, and I'd recommend you guys not checking your portfolio daily, maybe weekly, maybe monthly, whatever it might be. And lastly, I'm definitely not changing my strategy every time the market gets uncomfortable. So if the plan I have in place needs to change, it's going to be slow. It's going to be intentional. It's going to be thought out, right? I'm not going to make any emotional decisions. I'm not going to panic sell. I'm not going to panic buy. It's just going to be very level-headed thinking in 2026. And the environment already has enough uncertainty, right? So you don't need to add any more to yourself by reacting to everything on a daily basis. So that's how I'm preparing for the stock market in 2026, right? I'm not basing anything off of predictions. I'm not basing anything off of bold calls. I'm literally putting a financial structure in place that revolves around discipline and consistency, and a plan I know I can stick to if things get a little rough. I'm focusing on what I can control, I'm keeping things simple, I'm staying consistent, I'm automating my investments, and I'm setting myself up to where I don't need to be right. I don't need to be the perfect investor. I'll still come out on top. And preparing mentally for things too, ups and downs, because you know the market's going to go up, you know it's going to go down. So we need to make ourselves kind of mentally aware of what can happen. And honestly, that's the best way to do it in my opinion. So if you're watching this and you recently have been feeling overwhelmed about the market, you don't need to overhaul everything tonight. You don't need to make your plan tonight. Just start small. Maybe automate one contribution, trim one thing out of your stressful portfolio, simplify one decision, build a plan that works even when things feel uncertain. Because once again, that's how real progress is going to be made, especially in 2026 when there's a lot of uncertainty surrounding the market right now. So if this video helped you think differently about 2026, hit the like button, subscribe, and I'll catch you guys in the next video. Have a good one.